So let's get to yet another company that reported today. We heard from software platform Whispir, beating full-year forecasts with a loss of $7.3 million in profit versus its June prospectus, I should say, of $9.4 million. Now, the results were positive. The company continued to grow both customers and revenue since its IPO that was just in June last year. And we welcome back to ausbiz Jeromy Wells, CEO of Whispir. Thank you so much for joining us again, Jeromy, on a big day. I mean, I'm sure you've been very busy. So, customer acquisition versus increased platform usage. Talk to us about which one is really the focus as we move to FY21.
It's a balanced book of business for us this year. It's both. I think if we, last year we had a terrific year. We executed on the strategy, but we were very conscious of our existing install base of blue chip customers and that we have a relatively low yield of their potential spend or in terms of their communications wallet, and there's more work to do. And that continues to be an enduring theme this year. We have really enjoyed 124% in terms of customer revenue retention. 120% is best in class. That's just an outstanding result. We've substantially increased our customer success function. Of the 25% increase in headcount, 30% of those resources have gone into customer success, because the last 6 months we had record customer growth, and this year we want to maintain and assist them get the maximum value and benefit from the platform as quickly as possible. So we've got two trajectories. The other thing that was happened in the last year is we've completely refreshed the sales engine, and our sales productivity's substantially increased. And so we want to continue the trajectory, and we would see an acceleration in growth in terms of new customer acquisition. So it's going to be a balanced book. Both are important qualities of our business, but it's the underlying recurring revenue nature of it that's the key to our success in this kind of listed environment, because we have such good quality future revenue surety. It's enabled us to put out some guidance in a market where not many people are.
Jeromy, you mentioned the customer growth, the strength that you saw in the second half of the year, but you said that it has not yet had a material impact on revenue and annual revenue rates. What's the plan to go and convert those small wins into bigger things in the future?
Well, look, it's a consistent plan of activity. The other thing I think that's new, will be new this year, is our digital direct strategy, which will enable organisations and smaller businesses, medium-sized businesses that haven't really had the opportunity to leverage the benefit of our platform, will enable those businesses to consume a smaller chunk, small workflows, a curated suite of small templates, for example. So later this year, that'll create a new market opportunity. But look, we have a very structured program of communications engagement under the leadership of Ben Erskine, who's our new head of marketing, formerly from Xero, who's got a lot of experience in terms of how you engage with an existing install base and to build that digital presence. So again, two concurrent streams of activity, both really healthy, and we're really looking forward to the outcomes that they'll deliver this year. I think the interesting thing about our business is we talk a lot about COVID-19 and the impact that it's had on businesses in a negative way, but what it's really doing is forcing businesses to think carefully about digital transformation and how to execute on that agenda. And communications is a vital and important first step in terms of transitioning from manual processes and old ways of working. When you think about businesses that have been quiet and they want to get back on that business highway, the first thing that they need to do is really think about how they engage with their staff, their suppliers, their supply chain, their customers, and the community. And communications need to be forefront of that agenda. So we see post-COVID, we see a boost and an uplift of activity, and that we're well placed to support this enduring trend in terms of digital transformation for years to come.
Asia, US. Clearly, you're looking to build scale in foreign markets. Is the US particularly in your sights in FY21?
Sure. Oh, look, Asia was a rock star region, 44% growth over the year. we anticipate in FY21 that rate of growth is going to continue and actually increase a modest amount this year. North America, though, you correctly point out, is our biggest growth market opportunity in time. I think we're taking a balanced and a measured approach to the way that we engage with North America. We're conscious not to deploy too much capital until we've unpicked the nuances of being successful in that market. In the last quarter of last year, we did a lot of work with our awesome channel partners, AWS and Vonage, in terms of nuancing a shared go-to-market strategy. And we look forward to the benefits of that over time. But concurrently also, we need to invest in people and a quality of talent to support our ambitions in that market. Look, I think we have realistic expectations of what we can achieve. I mean, I think North America has been hit hard by COVID, and we're an Australian technology company that's not necessarily well known in that market. So we have work to do to build our brand, and I think that in the medium to longer term, it will become a substantial part of our market. But I think we're cautious about what we can achieve this year, given the...
Yeah, and it costs a lot of money to grow in a market that size. Jeromy, I'm going to ask this because you did reference, you're new into this listed environment. Each time you've been very kind with your insights here on ausbiz, but each time we've spoken and it's been after a huge share price reaction to news that the company has put forth, and it's always looked pretty positive. Today, though, in the wake of this results, the share price is down by 11.5%. Now, that could be a function of the fact that you're pretty priced to perfection coming into this result. However, just give us some color and some commentary on how it's been moving from a private business into this listed environment over the year.
Well, two things. I think the initial reaction was sharp, and but I think we're down just 5% midway through the day. So I think there's a way to run before we draw a judgment in terms of how we're performing. We're still up on where we were this time last week. So all things being equal, it's a pretty solid performance from the beginning of Listed Life. But to answer your question from a personal perspective, Listed Life has been terrific. We've got fabulous support of institutional investors that share our vision, and we have had a really clear agenda, and we've been, for the first time, properly capitalized to execute on that agenda. And I think that Listed Life has enabled us to attract a next generation of talent into the business. And you can see that with the key hires that we've been making, particularly over the last 6 months. And we, as those people have become onboarded, we're really looking forward to the material impact they'll have on our velocity through FY21 and beyond. And we would have been hard to attract that quality of talent, but now we have real momentum, and the IPO has certainly shone a light on the business, and we're on people's agenda somewhat. And obviously we have a lot more work to do to tell our story and educate the market about why we feel so strongly about our medium to longer term future. I mean, substantially sized businesses get built in the space, and we're ambitious, and we're looking forward to having a story that many people in Australia can be proud of. But it was been a lot more pleasurable than what we thought. Everyone's going, oh, Listed Life's going to be tough, but we have a commitment to governance and transparency, and we have had from the beginning, because in part the nature of our clients, government, emergency services agencies, banks and telcos, where there's it's necessary to behave in a way that's, where governance and understanding risk and managing risks are an important part of your DNA, and being resilient. And so the transition to Listed Life post-listing has been a lot smoother than what we thought, and we're really enjoying it.
Well, it's good to see a smile on the face. Jeromy Wells, Chief Executive at Whispir, thank you for joining us on the program today.
Thanks very much for having us back.
Thank you.